Welcome back to Morning Markets on Monday, the 11th of April. This morning, I'm going to take us through the key topics which we'll be looking out for as a team in discussing here on Morning Markets. Before I do, it was great to see some positive returns coming through in equity markets on Friday to close out a week in which market participants were digesting the additional information coming from central banks, which really highlighted in the US and Europe their desire and their appetite to move sooner in terms of tightening monetary policy, so raising interest rates and reducing the size of their balance sheet sooner than initially guided to combat inflation, as we've been discussing at great length in recent weeks. So far this morning, we've received the UK GDP and economic growth reports for February. In terms of GDP, the reports demonstrated that the total value of goods and services here in the UK is now 1.5% higher than pre-pandemic. Some of that number is demonstrating higher prices, but in the main, it's demonstrated the strong economic growth which we've seen since the onset of the pandemic. In terms of growth, the month-on-month numbers demonstrated a positive expansion in growth, but at a more modest rate of 0.1%. That's a more modest rate than the number which we had in January, which was 0.8%. Part of that number in January was supported by a boost in activity, as we had a surge in Omicron cases in December, which limited the growth number at that point in time. The number does demonstrate that data was softer in the service sectors outside of travel agencies and tour operators, where demand remains strong, as I'm sure many of us can relate. As we look out to the week ahead, in the US we'll have the March inflation print. At this point, there's an expectation that that print could hit 8.5% as demand for goods and services continues to outstrip supply, which is leading to cost increases. In Europe, we have the European Central Bank monetary policy decision. Whilst they are acknowledging their appetite to need to move sooner on interest rate policy, there's not an expectation that we'll see any change this week. Why? Because they're waiting for more information, more data and more observation points around the war in Ukraine before they make a decision which could impact economic growth. So they're expecting to maintain their current supportive monetary policy at this point in time. The French election will also be topical, building on the discussion led by Paul and Jeff last week. Over the weekend, we saw far-right presidential candidate Marine Le Pen succeed in pushing through to the second round of election and narrowing the leadership in the voting polls of the current president, Emmanuel Macron. Why is there a shift in popularity? Essentially, Macron is seen to be too focused on the war in Ukraine, whilst Marine Le Pen is looking to provide greater support to the challenges which they face at home in terms of the rise in living costs, which is gaining voter support. Across in Asia, it's a relatively quiet week in terms of economic data. Overnight, we had the inflation reports from China, which demonstrated a pickup to 1.5% in March, driven by housing and transportation costs and clothing. But food prices, which are an important aspect of the Chinese and the emerging market inflation basket, did see a slight moderation, which is positive. Thank you very much for watching. We look forward to bringing you up to date throughout the week here on Morning Markets.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.